If Friday made you feel like we're so back and the bull market is set to rage on, I've got some bad news for you. That was simply a short covering rally, it seems, and under the hood, things are still signaling caution. The simplest explanation is that we're seeing leverage unwind. Think about the yen carry trade, for example, and the defensive value play is just the next cheap thing, so to speak, to rotate into. Remember, it might not seem like the S&P 500 is crashing, but high beta names have been completely wiped out. And if you're looking for a tradable bottom in high beta, I think we're close, but I'm not sure for how long I would actually trust that move to continue for. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 8 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off today on the SPY weekly time frame, talking about candle structure and location, as we always do. In terms of structure last week, we're left with this odd doji hammer-esque style bar. It's got a green body, so there's small improvements with a close over the opening print, but we know the defining characteristics here are the lack of acceptance on the high and the lack of acceptance on the low. So buyers and sellers couldn't quite come to agreement, and that leaves me more neutral than anything else in terms of structure. Now, on the bar-to-bar count, it's not much better. You could see a slightly lower high, a meaningful lower low, certainly, but look at where we closed the weekly bar. Certainly back inside of the previous week's range, right at the previous week's open, but let's even take it one step further than that. Here was the 2-week equal low that we were using as a slightly over underline. We know that that was 686, right? We closed above that after a pretty meaningful foray underneath. And even if you want to take the weekly breakout pivot from this prior high back here, we technically closed right at or even slightly above that level into Friday. So in my view, location is incredibly neutral as well. The sellers had plenty of reference points to yield a lower high, previous week low, the 2-week equal low, the breakout point, and just none of it really shaped up there for a larger bearish move. Now, just because I'm not bearish doesn't mean that I'm overly aggressive on the bull side here. And really the nature of the S&P these last couple of weeks has been rotational, not momentum driven. So even if we were to break through these equal highs here, I'm probably thinking more about an incremental high and not this big momentum, huge, rally. Oh my God, 730, the measured move is going to be here in the blink of an eye. Not really, right? And I've got something for the bears too. It's very clear that if this is going to be the weekly double top, then your neckline is very well defined at this point. And honestly, you could even treat this as a small zone down here. We know that the bearish engulfer high from October 10th, as well as NVIDIA earnings on November 20th, are right there as well. So this is 675, and I would still use this as a short-term, or maybe even medium-term line in the sand on the weekly time frame. If we're above this, I think we're rotational, gyrating back and forth, incremental highs, maybe an incremental low, not really a momentum market, but it's not bearish if we're over 675, right? It does start to become bearish for a weekly trend reversal if that's the case. Now, why is that? Because from here to here, we actually did set a meaningful weekly higher low. There was a daily downtrend during this pullback, right? So we've set an equal low, which is why I can't really be all that bullish. If you're a bull here, you really just want to see bar-to-bar higher lows, and then show me the break, right? Give me that higher high to continue the weekly trend. We're just not seeing it. So this level to me is just clear as day as an over-under on the weekly. In the short term, and we'll talk more about this on the daily, of course, but if we do check back into a bar-to-bar higher low on the weekly, you would ideally like to see that stay above this 2-week reference point at 686. Let's quickly check in on the Fibonacci's. As we know, again, it's not all that bearish yet. We're still closing weekly bars over a Fib 38.2. So if you'd like to consider this bull flag consolidation, I wouldn't say you're wrong. It's more balanced to me than that, but over the key reference point for sure. If we come in here with our anchored VWAPs on the weekly time scale, you can see we're above the entirety of the pullback stack, and the breakout bar through the weekly pivot, right? We technically closed above that as well. So I just can't be a mega bear in the S&P 500. Again, there's problems in the NASDAQ, and we'll get to the NASDAQ, but I can't be a mega bear with the rotation happening in the S&P. I'm probably cautiously bullish, maybe looking to be incrementally higher, slight pullbacks lower. If we do take out 675, that's clearly my line in the sand on the weekly. Let me just quickly show you the volume profile, and then we'll drop it on down to our daily time scale, and we'll get granular. We'll also check in on expected moves actually in just a second from a higher time frame. There's the high volume node, and we've closed another weekly bar above the high volume node. So if we're going to leave a ton of overhead supply and this market's going to get crushed, you got to close a weekly bar below that, and it's just not happening. So let's quickly check the higher time frame expected moves. Remember, this is the yearly expected move here, 784 and 580. The monthly expected moves for the month of February, 718.38 and 665.56. That's your one standard deviation. You can see we approached the bottom end, and we're kind of right back unchanged from the close of January. Let's drop this thing down to a daily time scale. Let's get a little bit more granular and talk about the weekly expected move for this upcoming week's worth of trade. If you're not familiar, it's this gray box right here. You can check out the video tutorial in the top right-hand corner on how to set this up. If we're contained by the upper bound, the number is going to be at 702.66, implying a higher high in the daily trend count. That is bullish. If we're contained by the lower bound, we have 678.58, and that is implying a slightly higher low relative to last week's low. But unfortunately, notice that it is underneath that 686 short term, right, line in the sand, where buyers can at least keep the market slightly more neutral, right? So expected move here strikes me as being probably skewed slightly more bullish, but I wouldn't be afraid to call it neutral by any stretch of the imagination. If we're thinking about the trend here on the daily timescale, this was absolutely an intraday hourly downtrend. So from here to here, we did have the possibility of a daily firm higher low. So let's just say FHL for firm higher low. Now, clearly, and it doesn't take a rocket scientist to see this, right? But this is a lower low, undoubtedly. It's an equal-ish low to what we have over here, which is why we said on the weekly chart, this is not really what we want to see if we're full-blown bullish, right? We want to be holding those daily firm higher lows and continuing out to new higher highs, and we haven't seen that. So from this lower low, is it possible that we set some kind of lower high underneath this all-time high flat top? I think the answer is yeah, it's possible, and that's going to specifically be driven by what happens in the NASDAQ, in my view. So these two markets are going to be very closely related, or inextricably linked for the upcoming week. One can probably not do what the other isn't doing. So what does that mean? The 20 SMA here, if this is going to reject at 690.75, it is a midpoint of the range, and there is some hourly structure there. Could that be a lower high on the daily chart? Absolutely. And that's a threat that I would carry forward early on in the week. Once again, I think that, yes, the market doesn't look all that bad for the S&P 500, but typically, let's maybe even just throw one of these on here, a broadening formation is not a continuation pattern. This is kind of a reversal pattern in the market, right? Volatility is increasing, and the buyers are becoming less and less and less confident as you make lower and lower and lower lows, right? And just the whipsaws back and forth are really indicative of, once again, that volatility, short squeeze, short covering, and then ultimately when you can break into a cleaner trend, that's kind of where you get your follow through. So just want to be very clear that in the current formation that the market's in, I'm slightly cautious and not really in love with calling a directional idea, kind of in the midpoint, if you will, of even just consider this a balance range, right? This is the midpoint of that balance. I think maybe there's a daily higher low here, right? And if you're going to be constructive back to the upside, but you have to just counterbalance that with the threat, of course, for the possibility of a lower high. You do this and it's game over. Right? So take it day by day here in the S&P 500. And again, I don't want to really keep you waiting too long on the NASDAQ. And we will look at the hourly chart of the S&P in just a second, but it's almost impossible to talk about the S&P bear thesis right now without talking about the NASDAQ and the lower high that's much more clearly available underneath this 613, right? So if the NASDAQ just says, okay, great short squeeze, but now we're ready to set a lower high underneath what has clearly been just the balance range here, then that's no problem. And once again, that probably drags the S&P lower rather than allowing it to lift more easily, right? So that's the big take here and the big sort of link between the two major markets right now. Let's go back to the S&P. Let's hit the hourly chart. And again, you can just see the amount of volatility that's in here. I was thinking last week headed into Monday that, oh my goodness, this is the volatility box. Look at how nasty it was Thursday, right? Friday couldn't make up its mind. And then look at what we get this week. Now it's like, okay, the volatility box is here. So on this chart, what are we kind of thinking about? Well, the hourly trend has reverted back to up in a very quick manner, right? If you want to consider this hourly double bottom, you're well above the neckline. And most importantly, in my view, you have retaken that 686. We've talked about why that's important. So if the hourly chart is going to pull back, this is why we have some tension, right? The hourly can easily set a higher low here. But if this, let's just say we fizzle out to an equal high and then we do this, that's now this, let's go like this and this, here's your hourly double top, right? And this is your daily lower high. Do you see what I'm saying in terms of the competition of the time frames, right? So you got to kind of pick your spot, stay nimble this week, I think. If we're over 686, it's hard for me to throw in the towel on the long thesis, or at least the rotation thesis, this incremental, slightly cautiously bullish thesis on the S&P 500. But don't be shocked, again, if the NASDAQ sets a lower high under 613 and you get this on the hourly chart to say, Monday closes underneath 686, Tuesday opens below, I think you could easily just come back in and revisit the lows, ultimately, of the major range that we've been trading in. So 686 is your over-under. It's very convenient right now that it is confluence with the daily 50 SMA. Let's quickly hit it with a Fibonacci pulling from the top of the move to the bottom of the move, and it's about 50% of the retracement as well. So it would make sense that you could probably get more confident on any given move in the market should you start spending more time above or below the 50% threshold, if you will. Remember, stronger sellers, put yourself in the shoes of a seller, primarily on Friday, right? If you're short, smack on the lows here thinking, aha, this is it, this is the breakdown, you need to see a lower high under 686. You didn't see that, right? So strike one on the hourly chart for sellers is no lower high there. I think, once again, that 50% retracement mark will tell us if we could see buyers step up. This is probably my base case to look for a higher low off of 686, considering that the S&P is more well-rounded. We have some rotation happening in the sectors, right? So that's a base case. And then when and if we reapproach the equal high, that's where I think you're going to learn a lot about the market. If the market has no problem cruising through 690.75 daily 20 SMA up towards these highs, and you'll see that intraday with tempo, right? Is the market fast, meaning the tape, the speed of the tape? The market internals all lit up green? Are the sectors all green, or is it just a couple of sectors, right? You'll be able to see that intraday when and if you go out to break this equal high here. And that would tell us, of course, that maybe it's not the end of the world. If the market's really lethargic and sluggish, and oh my goodness, we can't really see a reason for a bid to be out there. If the NASDAQ's under 613, I would absolutely be thinking about, okay, here's your hourly double top, and this flips the tables back for the bears. Okay, so 686, it's undoubtedly a line in the sand. Let's quickly hit this with the intraday anchored VWAPs, and what do we see? I mean, we're clustering up around that. This will, rapidly approach that into the early stages this week, and we've currently closed over the entirety of the stack on Friday. So once again, the bull pullback first on the hourly to get here is probably the major thesis. If we do just get straight up continuation, I would be a little hesitant on new money longs, right? In terms of the way this market's been trading recently, you could just visibly see it as a range, right? Every time we start to get a little frothy up here towards the top side, it's tended to be a pretty good fade off the top end of the range. So when and how would I initiate this trade, or at least be looking for shorts across the market and really pare back the idea and thesis for longs? Once again, everything boils back down to our good friend, the NASDAQ 100. If the NASDAQ's underneath 613 on the Qs and the S&P is pushing into its range high, I'm probably not a breakout buyer here. I'm probably looking for mean reversion, even if it means, right? See what I did there? Means. Even if it means doing something like this, we drift back down into an hourly downtrend, fine. Remember that hourly downtrend will be required for the next attempt at a daily higher low right here. If this is just a simple hourly higher low, we could call it a soft daily higher low if this is just a 1 hour, right? But we can't really call it firm. So this path out here, let's just label this A, and then this is B. A actually gives us better structure as an idea, okay? That's what I've got for you here on the S&P 500. If I had to synthesize it down to one comment, watch your 686. Let's jump on over to the NASDAQ, but rather the NYSE market internals. What do we see over here? If you're not familiar with this dashboard, check out the video tutorial top right-hand corner. I mean, short squeeze galore, right? Take a look at this huge buying volume. It's cover, immediate equal opposite of what we had on Thursday. Take a look at this. Trend higher zone all day. Of course, the market did trend higher all day. And the cumulative build on the tick flattened out meaningfully into the close rather than really building out into a huge 5,000 plus read. So at the exchange level, a little bit more of a mixed bag over here rather than outright everything is just rocking and rolling on the bull side. But I will also give the sellers a lack of credit, I should say. On Thursday, unable to build out a negative 5,000 on what I thought was a fairly bearish day there intraday. Let's take a peek over at the let's go market profile as of right now. Market profile shows us what? Value probably got a little too short headed into that Thursday session there. And you can see here Friday value is technically higher. Great excess on the A and M period prints at the high and low of the day. So we will head into Monday with spike rules in effect. And ultimately, base of the spike will basically be the value area high there. So if we open over the spike, right, that's the most bullish outcome looking for top side. If we open in the spike, we learn something over high of day or under spike base. Spike base is again going to be value area high. And the level there that you could use on the ES futures is right around 69.43. If we open under the spike, that is, I would pay very close attention to an open there. You're probably talking about downside rotation, noting that anybody who went out long, trying to chase that rally, if you will, is going to wake up in a world of hurt, right? They're just dead wrong about the thesis there, and I think naturally the sell side will continue here. Let's jump back on over to the platform and take a look over at the NASDAQ 100, because once again, this is going to be a key player for even just navigating the S&P into the upcoming week's worth of trade. Let's just do this real quick. Let's throw on our volume. Great, awesome, fantastic. Here it is, NASDAQ 100. So what do we see in terms of weekly structure? It's a little bit wider. You get more of this red-bodied bar on a still indecisive doji. I would say that the bears absolutely have more of an edge here in the NASDAQ, and that would make sense based on everything we've talked about already as well. So yeah, indecisive, upper wick, lower wick, sure, you could say that, but the body of the bar is much more meaningful than that of the S&P. In terms of bar-to-bar location, lower high clearly, as well as a lower low, and take a look at that. Check it out. You've closed underneath the previous week's range. You've closed underneath the 20 SMA on the weekly time scale. This breakout level has been lost, right? You tried to wick into it, rejected, not even close to all-time highs. So a little bit more damage over here in the NASDAQ. And once again, is anybody shocked? Survey should say no. Let's take a peek over at our, first thing we'll talk about is just this, right? So you broke this trend line here, failed to follow through. You could then readjust your trend line and do something that looks like that. You closed underneath it this week, and you could still come in here and say something along the lines of, okay, this trend line never actually got a weekly close above, right? If you strike from this high to this high, that kind of establishes, there it is, no weekly close above, no weekly close above, no weekly close above. So a little bit more bearish on the NASDAQ. Once again, just using more reference points to reinforce the same idea. It seems like the answer is yes. Let's take a peek at the fibs from the top of this move down to the bottom. There we go, to monitor this pullback. Let's get a click, think or swim. There we go. We've closed right at the 50% fib. So no longer can we say that we're doing okay and buyers are like okay in the upper, third there of the range. It's just not the case. You're neutralized at the zero mark and you are starting to lose even some of these lows, and that's basically 613, which we'll talk more about momentarily on the daily time scale. Let's drop in our anchored VWAPs. Notice that you did not close over the entirety of the stack here, and instead you're starting to drop down into it. You're getting deeper into it via the lower wick, so it just doesn't really strike me as being a compelling look for the buyers to really rip out of this thing in a big way. What I would like to see, like if I'm trying to be constructive for buyers this upcoming week, you just really have to prove acceptance back over 613, consolidate above the weekly reference points, and then get moving through, or at least attempting, a breakout to new record highs. And given the nature of what I'm seeing in look no further than earnings season and what happened to Amazon, right? Look at all the high beta stuff and some of the software names just really, really taking a beating, right? It's hard for me to see a world in which this is just going to magically rip to new record highs. Would I love to be proven wrong for the sake of the long-term account? Of course. Gladly I'll let the market prove me wrong, but data points in hand certainly don't shape up to give me that warm and fuzzy feeling again on the long side. Let's take a peek at our high volume node. This is ultimately a decent close underneath. We haven't seen this in a little while, so once again, another bearish data point here on the weeklies. Let's quickly drop in our expected moves, and you can see here we have come closer on the NASDAQ to the lower bound of the monthly expected move, and it wouldn't be unreasonable, right, that the market could settle in to that area down here, which would be a breakdown, right? Undoubtedly, no doubt about that. Let's drop it down to a daily time scale. Let's take a peek at the expected move for the week here. Again, there's the video tutorial in the description. Here is the move, and you can see we've got 625.37 and a low of about 593.93. This is still a lower high underneath this as a balance range here, so that's problematic. And you could really see that we're just dealing with an equal low on the daily time scale down to last week's low. So there's nothing here that is overly bullish. I think once again, the big idea is, do we just set lower highs sub 613? It would seem likely given some of the nature of what we're really seeing under the hood. And again, we'll talk more about this as the show goes on. But for now, this is just a count, like let's go back to like basic trend analysis 101. This is a low and this is a lower low. This is a downtrend for sure because we have the lower low. And this move on Friday is simply a counter trend move, very intentional with the wording there, a counter trend move higher in the context of a newly established breakdown, which is developing a downtrend, right? So a lower high would be picture perfect underneath 613. Now, one thing that I'm just sort of thinking through actively right now, actually, as we're going through the recording is we know this market's been a little bit devious and sort of overshoots like a madman on both sides. So I would be curious and probably maintain the bear stance, even if we're rejecting underneath a daily 50 SMA. I know that might seem a little bit more so like, okay, look below and fail, you got to flip bullish. I just don't think good things will happen to this market on a NASDAQ where we've lost the 50. I think there's too many players who just kind of use that line in the sand wise. I mean, you're even under the 20, right? They're almost confluence at the same spot right now here. If you're underneath that, I just don't know that you're out of the woods. I mean, I might maybe ratchet down the size I would use off of a 50 SMA rejection. I might be a little bit more cautious in this circle here and then really lean into it in terms of thesis and trade idea generation on the short side. If we're underneath 613, that would make a little bit more sense to me. But I just can't really change my tone to being aggressively bullish after we've seen a pretty classic look above and fail, right? There was no high or low. This is what buyers wanted to see. Complete failure, lower high underneath the range, and now you're doing this, right? So still, this lower high here, I think keeps the entire narrative alive. So anyway, let's drop it on down to the hourly chart. Let's get a little bit more granular in terms of the analysis. I would say that unlike the S&P 500, the sellers still have an opportunity. Look at the upper wick into the close of business here underneath the key daily reference point. Like none of that has gone away. Could you make the argument for an hourly, inverted Man Ray pattern in here, left, double head, right? Sure, you could make that argument. You could say that if we get to here, then maybe there's some sort of buy-side reaction that steps up and there's a big reversal pattern. I could see that being reasonable, but the first thing I would look for is any kind of, look above and fail, rotate back down to here. Again, we'll have a spike in play based on market profile. So if we open in the spike or under the spike, some kind of Brigade bolt lower high underneath 607.25, that would seem reasonable to me if you re-lose this low from back over here, rotating to the downside. And ultimately what we're seeking is that daily lower high, right? Let's remember that this is a daily lower high. And the hourly trend has flipped up, right? You could see here's your double bottom, 1, 2. This, of course, your neckline being the highs. This is undoubtedly an hourly higher high. So all we need is an hourly trend reversal back to down, unwinding Friday basically, and you'll be in a hourly downtrend confirming once again that lower high. So that's the way I'm seeing it right now. Again, if you do poke through this, there could be a little bit of sustained squeeze into the moving average stack. This is where I would really start scouting for, again, let's just say a short back to here. Of course, you have to be Johnny on the spot and be open-minded to that as a possibility. I'm going to do something that looks like that, and more so based on what we just described from the daily, right? I would look for this short back underneath 613 after rejecting the daily 50, right? You could overshoot there and still yield a lower high. So that's my view on the NASDAQ here. Let's check in on two different Fibonacci's. I'm going to come from the failed breakout high to the low here, just noting that the Fib 38.2 is right in the appropriate zone, but I also want to come in from the top of Tuesday down to the low and just still point out, right, this is still within the threshold of a 50% fib retracement, a 61.8 kind of gets you your lower high up against the 50 SMA, right? So in my view, it doesn't matter which fib you pull, you're still not really suggesting bullish action here as long as you're underneath that 50 SMA, which once again can act as the line in the sand. Let's clear this up. Let's quickly hit our intraday anchored VWAPs and check in on these guys. There it is. And you'll notice they're barreling down, right? The more if we just go sideways here for a touch and try to get into it on, let's say, Monday late day or Tuesday early morning, you could be right there with the anchored VWAP stack coming from the top. You've got this one here, which you're slightly above from the Tuesday breakdown, which is why 607.25 is going to be reinforced as a key level. But generally, this zone in here still makes sense. I know I might sound repetitive, but that lower high is something I'm watching for. Matt, what's going to break your base case for the bears? Where do you change your tone back to being bullish? Well, first and foremost, you got to wait for the short confirmation intraday to kind of put that trade on. But I would say that the overall chart structure may improve if we do this, right, which I just labeled as slightly lower odds, and then go out to a higher high. So I would change my tone here. If you want to bet on this situation, and again, you have to be responsible for the ideas that you want to put on the table, but in my view, or the trades you want to put in your account, this would be where you want to try to make that bet. That way your risk reward is at least asymmetrical, right? And you could take a stab saying, okay, we're going to go back to the range high. You'd want to be a buyer at 613. You wouldn't really want to wait for half the move and see it take out the high. You'd want to look for the long in here. You'd want to let it prove it to you, right? And then maybe the way that you do this, and this is just an idea, right? Maybe you add to the trade here, right, as it continues to work after you've established a position there, targeting the top end of the range and then reevaluating. That's just what I would say would break the base case, in my opinion, for trying to seek a daily lower high in the NASDAQ. Let's jump on into our NASDAQ side of the market internals. What do we see over here? It's the same thing as the S&P. Extreme volatility given the equal opposites on the volume flows. You could see here, same equal opposites. This is indicative of volatility. This is not something that you can sustain. So when I say in the intro that this is a short squeeze, this is kind of why, right? There's nobody's a seller on Friday. Nobody whatsoever. So short squeeze, off the heels of the prior day that's down big, and value gets stuck, trapped at the lows, right? Let's go on over to the market profile. You can kind of see this over here, where value, again, is on or near the lows of this descent. This is the week. If I just do this, there's our week. So there's the Tuesday big breakdown. You can see values consistently moving lower, lower, and lower, right? Value here was underneath value, from the Wednesday session. So as soon as you start to see the market accepting above that, right, and your value builds out higher, everybody who is short at terrible location might start to say, okay, let me take this off into the weekend. So anyhow, short squeeze there, not really a P-shaped profile on the market, a bit more of that consistent trend follow through day. You can see an M period single print spike here will carry forward the same exact rules as the S&P 500 with an open above, inside, or below the spike telling us something different. 25,125 is the level I would use, value area high from Friday. Once again, to cover those rules in case you skipped to the NASDAQ, for example, opening above the spike, bullish, trend should continue, or at least its price discovery should continue higher as we potentially squeeze out more shorts. Open in the spike, just use prior day high and spike base. Open below the spike, that's the most bearish outcome, right? All of these traders immediately proven wrong, and likely we just get that follow through early on in the week off of a daily lower high in the QQQ. Let's jump on over to the platform and let's finish up our index look with the Russell 2000. Let's go out here to a weekly time scale and let's see what we get on a nice clean chart like that. There we go. Looking good. So weekly structure on small caps is completely different, right? Look at the solid green bodied bar, a little bit of a lower wick there, closing strong at the highs, maybe a little bit of an upper wick to add to the illustration here. So overall, very bullish, much more bullish than the S&P 500 over in small caps. And we've been seeing this rotation. We've been seeing the market literally broaden out. Look no further than an RSP. I know we're bouncing around a little bit, but check this out. RSP, the equal weight S&P 500, out to a new record high. That aligns with what we're seeing in terms of strength in small caps. So as this moves higher, again, I just don't think that we want to be mega bears in the S&P 500. I just think we want to be very timid about the S&P on the long side, given what we just talked about and the threats of the NASDAQ starting to break down from a balance range, right? I just realized we didn't really talk about big downside targets here. Of course, this pivot low is just what you would be looking at. So that's at 583.50. That would be an extension through the lower bound. We'll see if we ultimately make it there. Let's get back to this small cap index, Russell. Good structure. Looks great to me. Previous highs acting as support, rotating in the upward direction. This is still just a bull flag on the weekly. No problems there. Let's quickly hit it with a Fibonacci. The trend is clearly up. Lows, higher lows, higher lows, higher lows, higher lows, higher lows. No problems. Highest high. Decent pullback, right? Let's come in with two fibs from here up to the high, right over the 38.2. Awesome. Let's come from this to this, respecting the 61.8, closing back above the 38.2. Looks pretty good in my book. Let's jump on into our anchored VWAPs on the weekly. There we go. And we're above the entirety of the stack. Probably worth bumping one out to this level. Let's go ahead and do that actually by grabbing, this is the week of the 19th. Let's just pull this one for now. I'll update this in a future video, but let's go 2026. This is 0119 is the week we want. Awesome. And we've even closed above that anchored VWAP as well. Nice and bullish there on the stack. Let's take a look through the high volume nodes and see what we've got from this point of view. As expected, right, as you move into blue sky territories, you just have a volume shelf here. You break out over it, no problem. Blue skies, there's just inherently nothing there. In terms of the high volume nodes that exist underneath us for support, notice that last week's low did not even take out this high volume node shelf beginning here around that 252. Let's drop it on down. We'll take a look at those larger expected moves, just to share this, right? We're on our way towards the upper bound, clearly divergent from what we see in the S&P as well as the NASDAQ. Let's now drop it on down to the dailies and see what we get in small caps over here. Expected move is up to about 270, 232. As the top side, that's an equal all-time high, certainly a higher high than what we were dealing with last week, so that's bullish to me. And this low is at 257.72, slightly higher low relative to last week. I would call this equal low, and I would kind of continue to treat this as a line in the sand. Prior high should act supportive. Daily 50 SMA will likely meet us there throughout the week. I really don't want to see small caps underneath that 258, 257.75 spot. In terms of the daily close here, notice we retake the daily 20 and we've closed at the top end of this volatility range. This is important because notice that on the Thursday session when everything was selling hard, you actually did break down, confirming in small caps, into the 50 though, and then completely unwound it back to the top, right? If this is a balance range breakdown, this should be day one and the market should seek lower highs that look like that for trend continuation, right? Everybody sort of talking about the head and shoulders, and rightfully so. The pattern was absolutely there. That trade's not working out, right? So for now, I would think that this goes the other way, right? To go close the gap up towards the top side, or even in here, reach up towards the all-time highs on a rotation trade that's still favoring those small caps, the defensive sectors, not necessarily the big heavyweight tech. People are looking for returns anywhere but that as of right now. So noting what we see here, the idea is this: higher lows on the daily timescale keep this thing bullish, and this seems more logical to me, getting continuation over that 264.65. Let's take a look at the hourly timescale and see what we can see from this perspective. Once again, noting that this was a pretty decent close for the bears underneath the balance range, no follow through, and I got to give buyers credit. They didn't just stop and sort of come in a little bit from the, no, they closed right through the highs of the balance range here over that 264.65. Looks pretty darn good. I would be saying that on the hourly chart in terms of trend, you could easily set higher lows over the midpoint, reestablish an equal high breakout attempt, and then look for continuation, over with something along these lines, right? So this is hourly higher low, this is your breakout, and again, I would be more open-minded to this in the small caps versus something like the S&P. Why? Because we know that money is trying to seek returns, like attractive returns, anywhere but, mega cap growth basically at this point, which the S&P, although it's got many sectors involved, certainly with a XLK weighted to like 35%, it's just not going to happen. So there's your small caps. Let's quickly hit it with a fib from the top to the bottom, retaking the fib 61.8, just a hair into the close, as long as we could stay over the 38.2, I just don't think that it's the end of the world. So once again, this pullback here to set a higher low in the zone looks great, equal high, follow through something that looks like that. I'll raise the white flag if we were to actually do something like this underneath 258, but I am not seeing it yet based on just really the idea. Just forget about the end of the week, but just take a look at what happened earlier on in the week. I mean, on Tuesday, we didn't even make a lower low relative to what happened here Friday of the preceding week, right? It just wasn't even there. So stronger sellers are not really stepping up in smalls, and that makes sense considering the strength of the trend on everything from the weekly timescale to even the daily timescale here, which we've been talking about over the 50 SMA. All set from that point of view. Let's quickly hit it in the Russell side of the internals. We could see very similar situation. I would maybe be willing to still say, short squeeze-esque in terms of the volatility flip from sell it all to buy it all on Friday. Really not a meaningful build out of the cumulative over here. I don't think that this is as much of a short squeeze as what we clearly saw in the S&P and the NASDAQ. Let's quickly go on over to the market profile for the Russell side. There we go. Notice that value once again shifts from low in the profile up to the top end. Point of control moves higher. Small spike in M period. Nothing that we haven't dealt with already so far in today's episode. And you can see the point of control is actually through a little bit of that breakout zone. What I'm doing here is splitting the difference between this high, the upper value area high and value area high here. So I know the high is technically, boom, right there, slightly below. But for the most part, in terms of where the majority of transactions took place, this was a flip of point of control higher for sure. Let's jump back on over to the platform here. Let's take a quick look through our sectors. Let's go. Here we go. What do we see going on? Where was the weight? Who was leading? Who was losing? Energy leads the pack up 6.29%. Very impressive, but a very lightweight sector. Also kind of not what you want to see when it comes to inflation. It's going to be an interesting one to balance with the new Fed Chair Warsh in the pipeline, if you will. XLP defensive continues to outperform here. That is not what you want to see in terms of going out to new highs on the S&P. And once again, that's why on the weekly chart, I was so reserved in my opinion of a huge ripping breakout to like 730. I just don't see it given the sector posture. Industrials look great, and I do think that that's still slightly risk on. The way I'm seeing it these days is XLP, forget about it, but XLI, a little bit more related to the actual infrastructure build out of AI data centers powering these things, right? The whole 9 yards there. XLB materials still outperforming here, healthcare outperforming. Then we start to see things like financials. Okay, second heaviest weight sector, it is technically risk on. Let's go to the bottom end of the barrel. Software just cannot catch a bid for its life, down 9.52% on the week. Brutal in software. If you take a look at Mag 7, no love over there, down 3.85%. Communications down 3.19%. Discretionary 2.28%. Tech down 1.67%. It's a bloodbath out there in high beta stuff. It's a bloodbath out there in growth, and the defensive value play continues to be what we're seeing in the rotation here. Let's jump into energy. Let's quickly rip through this stuff. I mean, energy just looks, there's nothing bad to say about this. I don't know about getting long, literally smack on the highs of this move, but there's just nothing, there's nothing wrong with this trend. And as a reminder, here's a monthly chart of energy. This is like the beginning of a breakout. So any sort of pullback, higher lows on a higher time frame, I don't think you want to write that off. And you probably want to be paying attention to crude as well on this. If we drop into a daily chart on crude, I mean, we've broken the two primary trend lines. The short-term one was here, the major one was here, right? We've broken that, and now you can clearly see the market's trying to establish a higher low above in this new flag out of the trend reversal. You're over the moving average stack. They're starting to stack in the correct orientation. 20's retaken the 200. So, you know, crude could easily start to continue higher, which, again, might not be a great look for inflation, but for energy and, you know, that trade there, still look at your XOMs, look at your CVX, look at your VLO. FANG, not quite as good. Diamondback recently, but XLE, interesting. XLP, another, or I shouldn't say another, but the defensive sector, right? Consumer staples, an absolute flag breakout for the ages, ripping to brand new all-time highs. I mean, well extended beyond the daily 50 at this point, starting to get the cross up through it. I mean, this is just an impressive chart. And if we go out to that monthly again, this as well is breaking out of a pretty long-term consolidation here, where once again on higher time frames, pullbacks for higher lows might be kind of lucrative over that 84.50. You got to be careful about just chasing it right on the highs, but you know, in my view, we've continued to see volume come into it, accumulation clearly. Look at the moving average on the volume; it's under accumulation. Pullbacks in here, I think, would give an opportunity for those who missed the boat to maybe position into it. You get money managers who are starting to talk about this value play. It's an interesting thesis. If we could retrace some of this thin structure, we'll see if the market actually gives that as a setup or not. Let's take it on down to the industrial sector. What do we see over here? XLI, new record highs. Once again, this is like there's no issues with the trend here, but you're just seeing all of these clean trends develop where? In the sectors that are not necessarily going to drive the NASDAQ 100, which is what we would call slightly more defensive posture for the S&P, right? Let's get into the materials sector. Same thing, beautiful trend, nice distance between all the moving averages, nice clean sets of higher lows, right? Nice clean trend, lightest weight sector for the S&P 500. It's fractions of a percent, right? Where's your XLB materials? There you go, 1.67%. It's not going to be enough, right? This is not going to push out your S&P to a new high. XLV, I think this chart looks phenomenal on a weekly, right? You get your ascending triangle here. I think healthcare names should be a focus. It has not broken out yet. We know that this does fit the category of being D for defensive. I'd be interested in healthcare this upcoming week. Possible breakouts here up and through all-time highs to try to continue out of what I would just consider is a weekly cup and handle, right? There it is on XLV. Let's go on XLF. Let's take a peek over here back to a daily. What do we have going on? I'm a little impressed with the Friday session on financials. I was thinking much more of Thursday being a big headwind for markets, closing back down underneath this 53.50. I got to hand it to financials, catching a rebid back over the moving average stack and putting pressure on this breakout level. Now, I don't think we're out of the woods here. I still think there's an opportunity for this to be considered maybe just bear flag, something that looks like that. But if JP Morgan, primarily, let's go there real quick. If JP Morgan can hold up over its breakout level in here, this being the level at 318.50, I know we're getting early into the core list. If that can shape up, then I don't think we want to fight that, remembering what we heard from them on the earnings calls. And really, you know, you could lump in Morgan Stanley, JP Morgan, Goldman Sachs, Bank of America, all these guys, record-breaking, you know, in terms of volumes, trading, and all that stuff. mergers, acquisition. Like, it's a hot financials market right now. Really great numbers there. I wouldn't, again, be too willing to fight a move that holds over 318.50 for the XLF over here, right? It's really those payment processors, MasterCard, right? These things kind of look sluggish down here. Visa looks pretty sluggish down here. These are what's weighing on the XLF in my view right now. And it's not even private credit anymore either. If you look at something like, what is it? Owl, right? Blue Owl Capital. This maybe actually not the best example. Owl actually did take a beating on earnings there, but let's maybe go to Ally. ALLY, Ally Financial. Like, this is not horrible. It's not like a bloodbath where you'd say, oh my God, this is 2008 again there. You could go, what is APLO? Apollo? That's not the one I wanted. No. What's Apollo? Apollo Global. Yes, which one? APO. Is that them? That's them. Like, this doesn't look the worst in the world. I wouldn't say it's great, right? But it's not breaking down through the balance range low is primarily what I'm trying to illustrate here. We'll see what they say to us on earnings. Anyhow, let's keep moving from financials over to XLRE. Nothing to say about this midpoint of the range. I'm a little impressed with the move on Friday, pushing out to a new high, noting that TNX actually went out to a hold intraday there at 4.2. So rates, yeah, they backed off a little bit into the end of the week, but to me, it looks like this is bearish, right? Holding over a 4.2 there. Let's take a peek back over at SMH. This is where we could start to be a little bit more enthusiastic. We know that the software-hardware conversation continues to rage on, the battle between the two. You're off considerably, or you were off, I should say, considerably from the high, but just retesting and holding the weekly breakout point here, not bad out of the SMH, holding a 50 SMA, reclaiming the daily 20. Again, it's like, I don't want to be overly aggressive on the bear side for the S&P 500, and I don't think I should be if semiconductors look the way they do. So does this need another one of these phases where we get some consolidation, this builds out, and then we go into the future after a month or two of building out a range, and everybody's going to be frustrated and, oh my God, it's horrible and whatever, it's not trending, right? Oh, we failed the all-time high break, it's going to be the end of the world. Do we need one of those situations in SMH where this builds out a flag? Maybe it's a trend line, maybe it's not a trend line, maybe it's this. I'm just speculating, spitballing here with you guys as to what it could do, right? In my view, the strong close there on Friday means that it's not dead. I think that's the thing to keep in mind. This is not dead with what we're seeing here, and it's also not dead, even though the market's not been responding favorably to the earnings calls and all this CapEx and whatnot. You have to, the CapEx doesn't just like vanish into thin air, right? It's going to go over to these semiconductor companies who are building chips for these hyperscalers, and even if, take, for example, the Google TPUs and the Amazon Trainium chips, right? Those materials are like the manufacturing side of the semiconductors. It's going to continue to keep this thing afloat. That money's not just like vanishing, and it's not like all of a sudden we flip the switch and, oh, guys, we don't need GPUs or CPU. Like, we don't need any of this stuff anymore. We found a magic elixir for AI. It's not going anywhere, I guess is what I'm getting at. So with that, I would envision some kind of consolidation here that sets up something similar to this, and then maybe we get that secondary leg, right? This was kind of a choppy leg here. You could certainly see how frustrating that was. Gap up, gap down, gap up, gap, all over the place. But it is nonetheless a driver for the S&P to remain bullish. So semiconductor rant over. Let's keep moving through these sectors. TLT, not the worst thing in the world, retaking that 87.10. Let's jump on over to utilities. No comment on this still. I just don't have any big, bold ideas in utilities. I think you want to stick with energy. Forget about the actual providers. Let's go on over to IGV. This is where I think there's starting to become a little bit of a possibility of capitulation bounce. Look at the volume that's been transacting here over the last couple of days. This is record-breaking stuff. If we could start to see a move over the inside candle high, I think you get a tradable bounce. And this is what I was talking about in the intro. You could get a tradable bounce to, unwind some of this big sell-off that you saw here, but I don't know that this is going to magically fix the software trade. Look at the 20, look at the 50, look at all the damage done to this chart. Go out to a weekly chart, right? This is a full unwind of the April tariff tantrum low rally that we saw. It's not like, oh yeah, here's a higher low and slight undercut, but we're right back to it at the highs. This is a damaged chart where I would say there's plenty of room for weekly lower high, even monthly lower high, I'm sure at this point. Yeah, you could go monthly lower high here, and then who knows, like one thesis to consider, or at least think about for IGV, is if this AI threat of, we continue to call it the macro hard thesis, right? Elon's macro hard is the idea that AI can write any software for anyone, and maybe instead of having a bunch of different companies provide these little niche AI or excuse me, software solutions, you have one AI app that can build any other AI app that you need, and you just software loses kind of, it's a commodity, right? Anybody can make it, and you just prompt with language. That's the macro hard thesis, right? If that's the case, then the monthly lower high is absolutely there, and of course you're just game over, as in if you start to take out April's lows. So there's a tradable bounce probably in here somewhere. There's got to be something to maybe go counter trend after the volume capitulation we've seen and the leverage unwind. But, is it, oh my God, we're going back to new all-time highs? I don't think so. If I'm proven wrong come 5 years from now, sure, so be it. Maybe there's just one winner takes all in software, and that fuels all of this stuff higher. At the one winner, like think of it like concentration risk for NVIDIA, right? I'm a little bit ranting here now, but so let's get back to basics. Tradable bounce over the inside hammer high. I think you go counter trend through here and take a look at the hourly, right? It's been straight down. You could easily start to build the argument for inverted head and shoulders. Your step one might be to get here. Your step two might be to retake 84.25. All of that stuff seems interesting for a possible bounce trade, but I guess the bottom line of this entire conversation is it is just that. It is a bounce trade until proven otherwise. A lot of damage with the trend here. Let's jump on into the Mag 7, teeter-tottering on a do or die level. As we can see here, this is ultimately the head and shoulders distribution top, whatever you want to call it. That is the neckline at 62.65. You flirted with it opening underneath on Friday. Pretty dangerous looking over here. If you start to break down, I think that you easily have a trip to the daily 200. And once again, what does this mean for the S&P 500? You might go, it means cough. It means you might go sideways in the S&P as the other, 493 companies pick up the slack, but you're probably not getting a momentum breakout if you're losing the Mag 7 underneath 62.65. Let's keep going with communications. We could see here back-to-back hammer or sort of like inside hammer-esque bar. I do like the close right at the 115.85. This could have been much worse with a close here. Taking it day by day in a lot of this tech stuff, we know this is, primarily your Google, your Netflix, your Meta, right? Let's jump on into XLY, really damaged over here with Amazon, of course. I think that you have lower high threats underneath the 50. Tesla's not really helping out at this phase, at this point either. You could think of this as a bit of your topping formation. 2 days was all it took to damage the neckline. No more higher lows. If this steps up, it's just hard to maintain an overly aggressive risk-on stance. And you could just kind of, you probably felt the change in tone on these charts as soon as we moved into these versus what we had up here. Weren't these trends up here so, they looked pretty, they were easy to follow along with, and now down at the bottom, right, we're like, ooh, that's a sour taste, right? That doesn't really look great on XLY. Let's go on over to XLK, also not great, of course. Going to look very similar as a proxy to the QQQ. Lower high underneath is 143.75. Writing is a little bit on the wall there with a declining 20, 50s flattening out. You do have the 200 supporting below you, but this is like not a good looking chart at all. Starting to break down from a attempted tight consolidation and just, what do we know about markets? Markets move from contraction to expansion, right? You failed the topside expansion. Is this going to be a successful downside expansion? That's the TBD. That's the $1 million question right now. And as of, today's Saturday, as of Friday in the market, things didn't look all that compelling on the long side. What do I mean by that? Let's rip through some more supporting evidence. Let's jump into sector ratios. If you're not familiar with ratios, check the video tutorial in the top right-hand corner. This looks like it'd offer a lower high. This is breaking down. This is maybe a reversal pattern, but for now still underneath a flattened out 50. This lost the 50. None of this spells risk on. This is defensive. This is defensive. So I'll put an X, meaning it's not risk on, right? And then utilities, a little bit more neutral down over there. What about our specialized A set? How are we doing over here? Well, we get a big old X on the breakdown there, big old X on this breakdown. We'll give a check mark to the SMH versus XLV. X over here, X over here, X over here. You're batting 1 for 6 on risk on. So once again, ratio is not really indicative of anything all that healthy. If you look at the gold ratio, still telling us that things are problematic. If you look at the TLT ratio, still telling us that things are okay, gently for the S&P 500. Notice that the Friday rebound took us back over the 50 SMA, but Thursday, the market was feeling it there. The market was it was pretty substantial on Thursday to see that change. You could see that the Bitcoin Sailor Shift tool still signaling red. We did start to see a capitulation bottom step up there on Bitcoin. Let me just open that chart up in full. A little bit of capitulation here. Let me just throw on a volume. Let's get some volume on here, please. Futures volume, there we go. So huge volume on a daily, right? Starting to really creep into it. I think the sentiment swung too far pendulum-wise to the pessimistic, oh my God, everything sucks, Michael Saylor's the worst guy in the world, and obviously losing $42 a share on earnings doesn't really help. But I'd be curious to see if this turns into more. So don't write off Bitcoin as possibly being interesting for a bottoming thesis, especially when you take a look at this. How much time do we need? There we go. Take a look at this, right? Top end of this massive cup with handle broke out. Now you're getting the actual retest. Of course, if you want to play it, dare I even thinking about using the term safe, if you want to play it safe in Bitcoin, you might look for a recapture of the neckline here, but this is a not bad spot for there to start to become some constructive action in Bitcoin, which I think is worth monitoring for. Let's go on over to, we skipped, sorry. Let's jump into our dollar. Got to talk fundamentals before we get into the back half of technical evidence. Interesting spot, right? If Warsh is going to get in there, then possibly that breaks through, and maybe this changes the trajectory of like dollar being debased, so to speak, and the whole gold trade and whatnot. And you are seeing that, right? All you have to do is go look at something like GLD, and as soon as Warsh is announced, right, and it coincides beautifully with a nice capitulation top as well, parabolic top. But if gold is going to take a back seat here, right, typically the way gold works is it's not like you make the big low and then you just go sideways for a while, right? So I would expect some sideways out of gold here through the next little bit. I do not necessarily think that this is going to start ramping unless there's chitter chatter about Warsh maybe not getting the nomination, right? So just something to be thinking about. If he's out of there, if they're not going to go with Warsh, then yeah, maybe gold moves back up towards these highs. You're also seeing money managers start to allocate to gold, so I don't think that this low is going to get taken, but I just don't know that you're going to get this big. The targets on it are ridiculous. I shouldn't say ridiculous because they're just targets, but they're off in the stratosphere. I don't know that you go to those targets, but money managers are moving into gold. That's the bottom line. Let's keep going from the dollar over to, we talked about rates slightly already, but here is that inverted head and shoulders, excuse me. And there you are, right at the 4.2. So I think rates could, if Warsh is the guy, bounce here around 4.2, which once again, I think is, if we think about the narrative of what's happening, it's the unwind of leverage. And if we're going to get more higher for longer in terms of rates, I know Powell tried to be Volcker for a moment back over there as well, but I mean, Warsh could be the real deal if he's talking about Fed independence and actually reinstating that through the lens of higher rates and like we're not going to intervene and we're not going to throw the money printer on, right? And let's get this thing under control. So we'll see. It's all talk for now. Let's see what the actual action is when and if he gets nominated and confirmed. Let's take a peek over at the inverted ZT, big rebound in the inverted ZT. Let's actually, I didn't look at this on Friday, but what does this look like? Give that a little refresh. Yeah, okay, there you go. So the odds are not as high, and I got that yellow crayon again. There we go, flipping to red. Odds are not as high as they once were for that pause in the March meeting, which is kind of interesting, noting once again the whole Warsh debacle and his idea that inflation is a choice, and we saw that PMI, services PMI came in hot. PPI came in a little hot also 2 weeks ago now. So this is kind of an interesting little downtick there on expectations. If we jump into the actual report, I mean, there's jolts coming in far softer than the expectations, 6.54 versus 7.25. The quits rate was at 2%. I'm just looking at notes I have on another screen. Quits rate was at 2%. That's kind of stable. Layoff at 1.1, stable there. We also know that the unemployment claims here still low. I think 231 was a big miss in terms of the most recent numbers, but this is low. We know that the full labor report is going to get bumped out to next week. Here it is on Wednesday. There we are. As well as the CPI report, inflation, getting bumped out to Friday. So just to give you a heads up in terms of what's coming down the pipeline, those are the numbers. And I think this is going to be a pretty telling week for how the market maybe starts to perceive how Warsh is going to act as Fed chair when and if ultimately in there more firmly. Okay, so with that, let's jump on into the earnings calendar for this upcoming week. I'd say some honorable mentions, of course, on semiconductor. Anything semiconductor related, of course, is important here as SMH kind of lights the way. There's that Apollo you could watch to see what they say about credit markets there. Robinhood has to be a watch. I mean, how dare I skip over Coca-Cola with the red crayon? That has to be a watch. Datadog could be a watch over here. AstraZeneca, maybe for the healthcare side. We've seen drug makers and biotechs doing all right recently. Robinhood, we got Astera Labs, of course. A-Lab is the ticker on that one. I would say a little less interested in some of these other names. What else there? Let's take a peek. Shopify, of course. Veritiv, of course. Unity, unfortunately, has really taken a beating on the daily. I'm not as thrilled about that chart anymore. AppLovin for software, of course. Albemarle for lithium. Cisco, yep. And that's probably it on that day. Let's move over. Of course, Nebius, Critical, Crocs, honorable mention. Coinbase will be a top watch there. Arista, ANET, Rivian's interesting. Frog, interesting here. Applied Materials, how dare they place this so low in the list? That is a big deal. Moderna's got a very interesting daily chart. That'll be interesting. Camco, very interesting here on the nuclear front. That's probably it for now on the earnings front. Those are the names that I would be watching. Okay, there we go. Probably no earnings live streams. Maybe Robinhood. Do we want to do that? You can let me know some feedback. Are you guys interested in Robinhood's report? I guess A-Lab would also be a pretty interesting one for the semiconductor front. Let me know. If you want to do that, we can maybe do a Robinhood live stream, but that is about it. That should be a fun one. Vlad hopefully puts on a little bit more of a show than these cookie cutter, Tim Cook, Apple AI. Even Andy Jassy was just like total AI. In terms of earnings, speaking of, I just wanted to pour through some of these growth charts. Notice that the growth is continuing to come in above expectations here in many of the, as long as the blue bar is over the gray bar, you're looking good. And Infotech is the heaviest weight sector. The growth is not really set to slow down. It's not that earnings have been bad. It's the market's been really hesitant on this CapEx spend, it seems like. This is for Q4 of 25. This was year over year. Sorry, revenue growth. Yes, revenue growth, earnings growth. Revenue growth still set to really outperform. It looks like financials is maybe going to come down a little bit on the idea that rates might come down. Scrolling down here, profit margins are down a touch from forecasts in real estate. Look at Infotech there. Nice beat still. Really nothing that's like earth-shattering. Oh my God, can you believe it that they're compressing margins? This is all 2025 growth. Looks like Infotech still leading with expectations above where they were in December 31st. Same thing on revenue. Just continuing to scroll down. And look at Q1 26 guidance. Infotech's pretty upbeat here on guidance, which is pretty telling. Let's keep moving to 26 growth. Q1 still better than it was prior. What I'm trying to illustrate is that it's really not, when it comes to earnings, I don't think it's an earnings issue. I think it's a market scare issue. I think it's a leverage issue that's kind of happening here, which is another reason not to be overly bearish in the S&P 500 as we're just kind of noodling around sideways near the highs. You're not seeing, I guess this is kind of interesting, the fact that utility growth is set to expand and really overshadow Infotech almost by about a full 50%. More than 50%, actually. Yeah. So that's kind of interesting for 27, but a lot's going to change between now and 27, I believe. Let's keep moving. You can look at EPS estimates, still moving higher, right? So the idea, and what I'm trying to illustrate, is that I think the market's worried about leverage, right? Market seems to be worried about leverage unwinding. Software trade was way leveraged, and it's starting to come to a little bit of an end. Does that mean that we firm up? The fundamental picture isn't really all that bad. The more I look at this report, this is my third time going through the report, just kind of looking at the numbers again. We know that Infotech has been really not rewarded at all for good numbers. So if you're positive here, you get good numbers. But if you're negative here, you're getting punished by the market. Anyways, you could scroll around through this on your own time. The link is always public from FactSet, so you could find the report if you really want to dig in. But once again, the major illustration I'm making is just that the fundamental picture is not horrible at all, right? It's pretty standard that in your Q1 you get this little seasonal come in and then you sort of ramp into the end of the year. Look at the yearly growth here that we're forecasting as of right now. So that's that. Let's get back on over the platform. Let's finish up our look through the additional technical indicators. Let's go to bonds. There we go, and see what's going on. So inflation picture, any worse, any better? Flat, neutral, unchanged. Labor situation, flat, unchanged over the last little bit. Hard to make a discernible call from that chart here. Let's get into credit spreads. Small uptick through the week, but rolling over where they need to roll over. So if we want to remain risk on for the market, probably need to see this down in a more meaningful way. Credit spreads contracting again, not expanding. If we look at the HYG, it did a pretty good job of suggesting just be like aware of a near-term bounce because it was not making as aggressive of lower lows. It did ultimately do it here, but for the most part, notice, I guess what I'm trying to illustrate is from here to here. And if I hover my cursor, right, that's here to here in the S&P 500, we did have that small bullish divergence play out and ultimately seek follow through. So just to be clear, right, this is not the same low as this. That's what I'm ultimately trying to point out. So bottom line, HYG divergence still very important and has been telling us quite a bit about this market. And for now, everything seems to be status quo. We'll look for the next one ultimately, but still use that as a tool. Breadth, as we know, expanding here, not a shocker. We already looked at RSP. We saw the IWM. Hard to say that the market is going to crash and burn, but once again, a little skeptical with the growth drivers of the market. Let's get into the QQQE, the equal weight NASDAQ. Clearly not, the pain is in the tech side of the trade. Is anybody shocked? No. Let's jump on over to volatility. Not a bad look over here, getting crushed back underneath the 2050 mark post Amazon earnings, really getting all of that stuff out of the way. The next big one, of course, is NVIDIA earnings. We get some interesting stuff. Robinhood could be interesting this week, but NVIDIA is the next one that it's like the Super Bowl of earnings, which, hey, it is Super Bowl Sunday this Sunday, isn't it? VVIX is back underneath 103, which is helpful for markets to be a little bit more stable. If we look at volatility futures, this was interesting, and honestly, I think I should have done a slightly better job. I know we were on the Amazon earnings call on Thursday afternoon, but in here, you really had an interesting dip into backwardation that was almost immediately unwound. Whenever you see that, and you could carry this forward in your own trading, whenever you see this unwind back to bullish, you probably want to lean into that, right, as a helpful indication to stay long and trust long on that reversion back to contango from backwardation. So a little bit nuanced and in the weeds, but a very helpful tool nonetheless. Let's jump on into our let's go to skew. Where's that skew chart? Here it is. And what I want to do is change this to a P call. It's just a nice line chart already. So there we go. Your P call, let's do this. Here we go. It got pretty elevated there into the Thursday session, approaching that one. So the unwind there typically does start to mark a little bit of a bottoming formation, right? When the P call gets up to 1, yeah, you usually want to pay a little bit closer attention to that one. So that's all on the supporting evidence categories. Let's get into our core list of companies. Let's take a peek over here on NVIDIA. Really impressive snapback day here on the Friday session. But once again, I don't know that we are out of the woods. Earnings are the next big event, of course, and this just looks like noise to me. I think the best spot for shorts would have been here up against 181. They didn't get that, of course. So if this is an overshoot at the moving averages, I would re-short, or I would look to short NVIDIA underneath 181 if this breaks down. And of course, you'd want to see Qs less than 613. If that's the case, then yeah, underneath 181, I'm sort of looking for that. Looks good to me there. If we take a look on the hourly chart, right, you'd be losing all this. What goes straight up can come straight down if you lose the overhead supply, right? That's the main idea. If this does just consolidate into a bull flag, I'd have to respect it as being bullish over 186.50, but I don't know that I am fully slinging long NVIDIA there. Let's go on over to Apple. Apple looks way better. If you think about the way that this has come off the reversal from earnings, looks good up here. Inverted hammers, I think this could cool off a touch. I'd love to see a pullback here that does that. If we could get that on Apple, even if it's a little shy at the 50, that makes sense to me. 266 line in the sand, inverted hammer, failing to close over that Thursday high. You could clearly see this is unlike NVIDIA. So NVIDIA got beaten up and rebounded off the lows. That's that leverage unwind. Apple is still that value / safe haven, let's say SH, safe haven asset, the old granddad of tech, so to speak. It did not have as impressive of a day because the mechanics weren't really there for it, right? So consolidation into a daily bull flag, I still think fits this just fine as a value idea into or near the all-time highs as a target. Let's go on over to Microsoft. I think this could go counter trend like the IGV over a Friday high. I think it's interesting that it did, of course, close the April gap all the way. It's where we're starting to find some support. Don't love the damage that's been done to this chart, right? We have this big breakdown of the weekly bear flag, snapback, moving averages are all wrong, 20, 50, 200. just a tough chart to try to catch the falling knife in. I think you could start to build some structure down here. And if you get structure that starts to change the tone, that might be interesting. But just expecting a big V out of this, it's like back to 500, so to speak, probably not. I think that the inside bar thing here is just a trade, exactly like we talked about in IGV. Here it is on the hourly. Your structure is not even as nice. If you really wanted to throw an additional level on there, you could do something like this. 401.50, just doing a little bit of homework here with you guys on the channel. There we go. Oops, zooming in. Consolidation, as long as we don't go out to a new low, I would say that this squeeze or pinch or counter trend is possibly on the table. If you do go out to a new low, it's just like how many times you want to look for that counter trend and just to have it kind of blow up and continue to drift lower. It's just not there, right? I think there's stronger names than Microsoft for that trade. If we go on over to Amazon, nice rebound to start the day on Friday, closing strong at the highs. A lot of damage done to this chart as well. I don't like this from a long-term holder perspective, but unfortunately, right, where did we rally back to? The bottom end of all the overhead supply. So I think the big threat here is still this 211.50, this prior low. If this rolls over and starts to really take a hit, I think we're just building value higher, and you're going to need to rotate through all of this overhead supply that exists on the chart. A bit more compelling would be if we just recapture that. So on the hourly chart, if you're a bull in Amazon and you're like, no, this thing's going back to highs, this thing's going to be a beauty, you want to see bull flag here. You want to see hourly breaks quick and early to retake to 1150, and that's where you start to get, okay, we've reclaimed the bottom end of the range. You could go out to like a monthly chart here. Just do this on a weekly. You could say, look below and fail, and now you're starting to work your way back up towards the top end of the range. Really, on a day-to-day perspective, we'll do exactly that. We'll take a day-to-day approach, but for now, it's very clear, to me at least, that the 211.50, that high and this low, it's got to be your over-under. If you can start to retake it, fine. Maybe we're not all that bad here on Amazon. If you really start to struggle and even drop 207.25, yikes. Don't love the amount of overhead supply on this. You thought it was bad on the Google sympathy move. It got even worse on that Friday open on the gap down. Speaking of Google, take a look at this. Strong recovery there on Google back towards this area of overhead supply, but not able to close above on Friday. I'd be interested seeing that Google, in my opinion, is one of the stronger Mag 7 names trend-wise. I'd be curious to see if we could do excuse me. I'd be curious to see if we could do this on Google back over 327. Is this just a higher low on the hourly for Brigade Bolt here over the 50? That's kind of the question I'm asking into the early stages of this week. Over 327 looks good. If we're just consolidating here, I think you get thin structure retracement if you take out 321. That is Google. Let's take a look at Broadcom. A change in tone, perhaps, at the 20. First time we went into it and didn't just back away hard like we had every other prior time. So interesting idea here is, does the daily start to go inverted head and shoulders back over 334.50 for something that looks like this? That, I think, is the next possible idea, seeing that we did get that hard reset finally. Remember in here we were like, this chart just needs to flush, it needs to do it, needs to hit the 200, needs to do something, needs to close this gap. Well, we've done all that. We've closed the gap, we hit the 200, we're starting to see buyers step up in a loose degree. I don't love the idea that this is still some topping formation that looks like this, but if we can prove it back over this 334.50, then fine. So consolidation here stages the inverted head and shoulders in the short term, and then there is where I'd look to go back to the 50, right? And maybe there's a pre-earnings run-up if there's just this big new wave of instilled confidence on the semiconductor side of the trade. Let's go on over to the metaverse. Let's take a peek over here. Hammer, lower wick-ish off of the moving averages. I don't love the fact that this didn't find any support over the 200 after the big gap up on earnings. This would have been your ideal outcome, right? Classic Brigade Bolt over the double bottom neckline. No dice. So with that, I see this more as a lower high threat than anything, and just back to noise underneath the 200, unfortunately. For me to be bullish on my Meta, got to be over 678.50, but then also retaking the 200 SMA here, which maybe flattens out and starts to do something around 687.50, right? So that's that one. Let's jump on over to Tesla. Don't love it. Still don't love it. There was a really nice opportunity on that Wednesday breakdown. Kudos to anybody who got that. Day 2 follow through here. And even long over the hammer high on Friday, not a bad look also over 401 supporting off this equal low force field effect from the 200. As of right now, I would tend to think that there is a lower high threat here underneath 415.25. That's the origin of the breakdown. So do we just get a daily lower high to continue in the downward direction? So 415.25, big line in the sand for me early on this week on Tesla. You could see the flat lows. You could see how we struggled with it there. Remember, the broad market pumped pumped. What am I, one of the new kids on the block? The broad market pushed. The broad market rallied. It squeezed into the close there versus Tesla taking a little bit of a move on the chin, backing off a little bit. So 415.25, very well defined. If it's going to stage a lower high, that's likely where it should be. If you really want to get fancy with it, you could probably say back underneath something like 410.75, and you're looking for some shorts back down towards the low of that Friday session, or even the opening print would make good sense there at 401. Let's go back to daily charts. JPM we talked about already, so I won't belabor the point. This higher low is the next critical component. If you do this, looks ugly, does not spell fun times for the S&P 500. Palantir, inside day. Like software, I think this looks way better than Microsoft for a potential counter trend here over 136.75. Classic bullish 3-bar play after a potentially oversold move, right? I mean, you're down, what was this, like a 25+% move, right? 25%. 22% move from the top earnings gap up to the low of the Thursday session. If this needs to cool off a little bit on the short side, that is, if it's going to pinch out shorts with terrible location down here, I think you're just long over Friday's high, so long as it doesn't gap up and give the professional move. As long as there's no professional gap up, over 136.75, 145 becomes the level that I would start looking for as the next potential threat, right? So early week is this, and then if we start to struggle there, that spells trouble. Let's get on over to AMD. Let's actually go Palantir hourly chart. Let me just take a peek over here. Yeah, very well-defined structure. Look at how sideways it was. It can't stay this sideways forever. So I think you get range expansion, 145 target on a break of 136.75. Let's go to AMD now. AMD, not bad on the overshoot of this level. I think that this could deserve a lower high somewhere in here underneath the 50, underneath the 20. This big earnings gap remains unclosed. And then what do? Right? We go on and we punish the OpenAI gap, which is from back over here. That's 190.85. Daily 200 is mixed up in there. Full gap close 170.60. As of right now, just based on the lack of continuation lower on Friday, and that's fine, right? You've already been damaged so much here. I think you could just cool off, build some sort of range, and then try to make the move. So this is a patience play on AMD for the next possible short. I don't think you want to just be jamming it on the low, immediately following the gap down. Let's jump on over to Robinhood. Robinhood is reporting earnings on, what did we say, Tuesday? So Tuesday after the close earnings means for me, I don't know that I'm all that thrilled about trading this early on in the week. This is not one of those special names that's getting the new Monday, Wednesday, Friday expiration. So on the hourly chart, yeah, strong counter trend. This is going to trade more like Bitcoin. So watch to see what Bitcoin does over the weekend, just to see whether or not this is going to make more sense as a long or a short for early on this week. If I just take a look on another screen, let's go Bitcoin here. Bitcoin as of now has paired off some of the rally we saw. Let me maybe go to an hourly chart quickly. Yeah, it's paired off some of the rally from the bottom that we were looking at. Let me just bring this over real quick. Bear with me for 1 second. There we go. And let's pull this up. This is just the continuous spot price from Coinbase. Here we go. How frequently do I do this? Not very frequently do I bring this back up. But take a look at this is what I'm ultimately getting at. Forget about these moving averages for a second. Let's close that one up. Oh, the black crayon is still also elusive. Let's go with the red crayon, I suppose. This lower high is kind of the problem, right? Lower high here, this, now another lower high. If you start to crack this, I would start to favor a little bit more of the downside on Robinhood. This is that capitulation low, and Sailor's average is still above us over there at 76.09, whatever it is. 76.096, I believe. So that's Bitcoin. Getting a little bit ranty here, a little bit more free form in the video today. I just saw, I was continuously reading that feedback from the comments in the video from, I think it was like December 31st, one of the final videos of 25. Everybody was just kind of like, keep doing what you're doing. This is great. Don't change a thing. You could point to the video in the top right-hand corner. It's a good reminder. Thanks for it. Like, I don't know. It was like, seemed like just keep doing what you're doing, so I'm doing what I'm doing. Here's Robinhood, right? In terms of the levels, I think this is a bull flag. If we see weak Bitcoin over the weekend, I would just look for it to turn into, right? Patterns just morph. Failed pattern is just a successful new pattern. Morph it into a head and shoulders, and then start looking for your downside. Remember, earnings on Tuesday after the close. We'll see if they're immune from the theme of ultimately big beats resulting in downside moves, right? We know that the Mag 7, the big risk-on stuff, has not at all been well received by the market. Zooming back out, right? This is the threat that a lot of things are under right now, and Robinhood's just no different. So This would be the line in the sand. One thought for these, and the same would hold true for Palantir, right? If this can continue a little bit lower. One thought for these companies is if they do just build out multi-month bases, let's say earnings is not all that compelling, we just go sideways, right? Something like this. If we're just sideways here for a couple of months, then we get a follow-through day to the top side, maybe they'd be reinteresting to put back on as a major theme trade as they were through kind of this rally in there, right? That's Robinhood. Let's keep moving. Let's finish up today's episode and installation. We got to take a look at IBB, which is the biotech ETF. I am not willing to trade biotechs as individual companies. Way too gappy, way too much threat, way too much risk, right? The idea there is that all it takes is one wrong trial move and it's game over, right? As we take a look at the IBB, there it is. Look at this balance range. I think we've got a breakout point perhaps brewing up here at the highs, which is, there we go, 177.75, let's just call it. Even 178 is fine if you'd like, something like that. You could refine that level in terms of what exact strategy you want to use to enter, but Brigade Bold over 178, it's kind of nice here. It plays along with the XLV thesis that we had earlier. IBB is the ETF for biotechs. You could also use XBI if you like. Oracle, I think that this trade is interesting as a possible counter trend. This is down now how much over last week? Come in from there to there, an additional 22% lower on Oracle, little inside resting bar on the Friday session, lower volume. If this can perk up with volume pre-market and show some interest, people interested in playing the counter trend bounce, I think this fits the IGV thesis as well for software snapping back, right? So let's just do something that looks like 143.15. That's fine. And your targets to the top side, just this thin structure retracement, incremental targets here, here, and I'd say this low here. Okay, so you could walk those up. Right, the idea is that this goes inverted head and shoulders on a software snapback. So Oracle fits that theme, and once again, probably looks even a little bit better than Microsoft from my view. Let's go Qualcomm. Qualcomm's interesting for semiconductors. I mean, it's acted as a dog of a semiconductor, but once again, look at your inside bar there post-earnings. I think over the 2-day equal high, if I could just grab the right tool, didn't do much. Oh, geez, I really did a poor job of putting all the levels on and doing my homework before actually firing up the recording, huh? So apologies for that, but you're seeing it real time here on the show right now. There you go. 139.40, 148, excuse me, is the top side target. Some semblance of a gap close. Once again, this is a trade. This is not, oh my God, let's buy Qualcomm as the new AI leader. Look at this chart. This is horrendous in terms of a long-term hold. This is like counter trend snapback moving back up through some of that earnings gap range. That's Qualcomm. Let's move on over to Monster, believe it or not, MNST. MNST. Not MSTR, that's MicroStrategy, which is no longer micro, but check out this MNST up and over 82.75. This does fit into the consumer staples category, canned beverage, of course, so something that looks like that. Not bad. Look at the strength of this trend. Pretty darn good. Inside bar on Friday, inside bar on Thursday, light volume with both of those inside bars. Can we see some kind of follow through like this? That's the million-dollar question. Blue sky territories, I think it's tight enough where I'd be willing to take a look at that into a new high. MNST. MOS, speaking of M's, MOS. Cup and handle with a reversal underway here. Look at the flat top of the sort of handle that's been built out. 200 SMA is probably the target back to this high over here as well, around 31 flat. Not the best and not really like my favorite thing to look at, but you sort of have to be adaptive in this market and go where the setups are. So if this is going to be it, then, that kind of idea right there, 29.10 into 31, not really the worst move in the world. Inside bar on the Friday session, MOS, Mosaic, right? Let's go on over to VRT. These guys do report earnings this week, so just a heads up and caution note on that. But over 200, kind of interesting. It's held up very well considering some of the weakness that we've seen in these high beta names and sort of things related to data center. And these guys are in the networking space. So in my view, over 200 after this relative strength holding the moving average stack, this is like classic inverted head and shoulders, rounded base. If we really zoom out, is it a cup and handle? What do we have off to a left side peak? Let's go to a weekly. Not really. This is like V-shaped. This is way, way high. But nice base up here with some relative strength. Again, earnings could throw this thing for a loop, but at least early on in the week, I think earnings was, this is the S&P 500. Sorry, let's go back to VRT. Earnings was when? The 11th. Right, the 11th, let me go back to my earnings calendar. Where was that? Over here. Earnings calendar has us on, there we go, Wednesday before the open, VRT. Okay, we'll see where ultimately it lands. But 200, I think if you could get an early week trade on that, build some cushion, maybe. Not, it's a good looking good looking little base here on VRT in my opinion. MMM, next up. Market maker move? Nope. 3M. I don't think it's a long right now. I think that you have to let this back off. I think you have to let it build some kind of higher low in here. But as long as it can do it over this kind of 50 SMA, I would keep this thing on a watch list, let it tighten up, see if we can get some kind of flag, and then over 173, let's rock and roll. Let's see if MMM can do something special for us. Remember that this thing kind of got hit hard post-sickness when it didn't, we were like, oh, we don't need all these, PPE and all that stuff here. So, you got some left side peaks to be contending with. I just wouldn't write these things off as non-influential. I think 173 is a nice alignment. 183 would probably be this left side peak, right? Here's 173 right there as well. So just pointing that out, that you do have some left side to be working through. This is not all-time highs on MMM. And then lastly, let's go IONQ. IONQ in the absolute gutter. And let's take a peek. If the markets get a bounce, I would be looking for shorts at 43.60. I would even be looking for shorts at 36.50. Earnings are around the corner on this one, so not an issue this week. Why are we looking for shorts here? Parabolic top, dead and gone, losing the moving average cluster, 20 under the 200, under the 50. Ugly, ugly stuff. Previous base low acting as resistance on the Friday session. It moved over Thursday's high, but not in a meaningful way. So if this just, lower highs, 36.50, Brigade bolts underneath 30.20. These things I think are ripe for just continuing to drift in the downward direction. And I don't see a world in which markets are moving into defensive places and you're going to get IONQ, the speculative of the most speculative, really ripping back in a big way up to these highs. So my 2 cents, lower highs here, lower highs here. See if we can find some shorts on IONQ. All right, that's what I've got for you in today's episode and installation of the it is a Saturday, of the weekend edition video of the weekend, what do we call it, weekly watch list, right? So thanks for joining us here for a little bit of your Saturday or Sunday, or maybe even Monday if you're watching on Monday. If you enjoyed the video or learned anything new, let us know down below in the comment section or by giving the video a very simple thumbs up. Give us some feedback if you do want to live stream the Robinhood earnings, but if not, we will be live, of course, every morning as we typically are for another episode and installation of the pre-market prep kicking off at 8 a.m. Eastern time. Hope to see you there up in the office. With that said, have a green trading week, and as always, I will see you in the next one.